Good morning, good afternoon, good evening, folks. Mike Zuber, one rental at a time. And man, having an expert series, bringing on attorneys, real estate investors, entrepreneurs, and mortgage brokers. Isn't this channel amazing? Can you believe a more important person to talk today than Matt, the mortgage guy, with just how nuts the 10-year treasury's been since Friday, man? I've never seen moves like that. Friday's move was one for the record books for me, but I thought I would ask you. You look at it a lot more frequently than me. What's been going on the last 3 or 4 days?
Yeah, it's like going to an amusement park, right? You get to ride the roller coaster. You go up and you go down, and to simplify it, like my channel is all about simplifying it for the consumer. When there is economic uncertainty, when there is stuff going on in the world, it doesn't have to be United States, right? It could be anywhere in the world that could be detrimental to the economy, and vice versa. If there's good stuff going on, that affects interest rates. It affects long-year mortgage rates. And, we don't have to get into the mechanics of how this affects that and the 10-year, all that. Just know that when news comes out and they're like, oh my gosh, South Africa, Omicron, new variant, how is the vaccine going to react to it? That is uncertainty. Wherever you stand on that whole thing doesn't matter.
It's uncertain.
The markets react, and mortgage rates all of a sudden get 80 basis points better. So in one day, you go from 3 1/4 to 3 1/8 or whatever, the rate is. And then
let me say what I look at is I look at fear and greed. I think Greenspan once called it fear and euphoria, whatever you want to call it. But when the world gets afraid, rates fall, right? People rush to the United States. So they buy the bonds, which bonds, and then rates go down, right? Bonds up, rates down. So yeah, it's pretty simple. So yeah, Friday, a half day of trading was wacky.
Right. Yeah. And it was funny too, because it's like, certain things were closed down. There was title companies that weren't operating. There were some lenders that weren't operating, but lenders were like, holy cow, I've got loans. Like, let's lock it now. And really, I think the message I want everybody to understand is that right now, when there's volatility, and Jerome Powell can say something the next day, and then the next week kind of switch stance, you just want to be in a position where you lock your loan. Another thing I've seen a lot of lately is people who are over analyzing the heck. I had a guy call me on Monday, and I talked to him after my YouTube live. So I called him like at 7:30 at night.
Oh, wow.
He said, Matt, will you review these 5 different loan estimates I got from 5 different lenders? And then as we're talking, he goes, oh, the 6th one just came in. Review this. And this guy had himself spinning in circles trying to figure out, this rate at this cost, but it's missing this, and this one has PMI and this one doesn't. And I told him, I said, there's 3 of these that line up with what I'm offering, which are the 3 best. For all intents and purposes, the same deal, right? The other 3 are worse. They're higher priced and they operate off higher margins. But between X, Y, and my Z,
pick one.
One of those works. Submit the loan tomorrow and lock it. He'd been in contract for 4 days.
Oh my goodness.
Right? And that's what you don't want to do if you've got a purchase, especially where it's more time sensitive, is analyze the heck out of it, let all this volatility go on, because you're never as fast as the market. And that's why sometimes we'll show refinance scenarios, and I'll tell somebody, like, this is the refinance scenario from pricing I pulled at 12:37 p.m. By the time you look at it, review it, talk to spouse about it, call me tomorrow, it's going to be different. It changes every single day. Every day mortgage rates change, and it's not a ton. You're not going to go up a quarter by the next day, but
there's movement. It's a pretty liquid market. Yeah.
Right. And so if you like it, lock it. Continues to be a good stance to have in the mortgage world. And maybe there's times ahead, because there's been times behind where it's a less volatile market and it's not as important. But for right now, don't gamble.
I think Jerome Powell is going to pull an Alan Greenspan and be very talky and not say anything the next couple of months. The other thing, what I mean by that is Fed speak can swing the market, right? Monday, Monday, a recession's coming. Everybody's going to stay home. Tuesday, it's not a problem. We got to raise rates. Powell's going to move markets and specifically move your market every day, I think, for the next couple of months. The other thing I want to talk about is we called it, I think 2 or 3 weeks ago. We talked about refinances falling. We said, hey, watch out for some of those unscrupulous or not, whatever, those bad brokers out there who are just going to slam people because 60 or 70% of loans were cast in the last 2 years. And refis are down 15%, got reported today by Mortgage Bankers Association, but purchases are up 5%. How can that be, Michael? Interest rates went up. How can purchases go up? I thought everything would fall apart if rates went up. That's not what happens, folks. Human behavior is pretty consistent. Mom and dad get off the fence and they start to buy a home when they see the market turn, just like Matt and I told you what happened. So right. Are you seeing that too?
Yeah, for sure. Mortgage refinance volume will continue to fall. There's Correct. Less and less people that a rate and term refinance is making sense for less and less people.
Yeah, it's getting, the pie is shrinking, right?
Every eighth we tick up, there's another pile of people that, rate and term doesn't make sense. So really 2022 is, in my opinion, going to be the year of the cash out refinance.
Okay.
Cash out refinance makes sense. Tons of people have a ton of equity.
Yeah.
I think smart mortgage brokers who are trying to add value and legitimately serve people are figuring out how we can best educate folks to help them make the decision. Not everybody is going to want to do a cash out refinance,
right?
Or it's not going to make, financial sense. But for those that do, those will be more prevalent than the rate and term stuff because people are sitting in 2.75, 2.875, right. And 3%. And on the purchase side, interesting note, I talked to a real estate agent this morning and had an interesting conversation because he had a client lose an offer, and a good real estate agent who wants to serve people said, truth be told, I think it's a good thing that we didn't get this one. There was 5 or 6 people bidding on this house, and it was more than this should have been paid for this house. But he was telling me the thing that he's seeing, and I see it as well, like you said, buyer demand spikes when people are like, oh my gosh, rates are going up.
I missed it.
Still
yes.
Good. But at the same time, inventory has shrunk a little bit.
Again, yeah, it's crazy.
There's nothing out there. And so these crap houses that shouldn't be selling for 780 have 6 offers above 780. Yeah. And so it's an interesting little dynamic because I made a video earlier this week where for sure buyer demand is there, and it's not just willing but able. People, yeah,
that's the key. That's the key with demand, right? It's not the willingness. You have to be able to pull the trigger. That's the key. People think demand is willing. No, everybody's willing or wants a Ferrari, or not everyone. Lots of people want, but not everybody can stroke the check, right? That's right. The key to demand. So yeah, you're right.
Yeah, and truth be told, from 3.125 to 3.625, the people that I'm seeing, the people that I'm pre-approving, it's not going to affect them much, right? They're going to still qualify, and maybe some people will, see a 10% or a 5% decline in how much they qualify for.
Sure.
But a lot of the people that I'm working with, dual income households making 150, 160. Their payment's going to be $200 a month more, but they're still going to buy in the neighborhood they want at the price point they want. They're just going to pay $200 more per month because the rate's slightly higher.
Yeah, that's the key. If rates go up, just like we said weeks ago, if rates tick up in a slow and measured fashion, it's going to pull forward demand, not crush it. If rates for some reason went up 0.5 point in a day, that could dent psychology and cause people to pause. But these little moves of a hundredths and a tenth, it's going to pull forward demand, just like we said. Hence, refis down, purchases up, and that will continue for several months to come, I think.
Yeah, for sure. And on that note of supply and demand, Redfin's got a bunch of data, so I read their stuff and I reacted to some of their stuff talking about 2022 predictions.
Oh, I saw that.
And I agree. If there's 1 million more homes hit the market, there's so much demand that it gets absorbed really without any big splash, right? There's no event that is going to, like you said, have a dramatic effect. 1 million houses in 1 month or 0.5% in 1 week, that stuff's not going to happen to have any dramatic effect on that supply versus demand imbalance. So
Yeah.
next year we continue to see plenty of demand, very little supply relative to that demand.
Yeah.
And home prices continue to increase, albeit at a slower rate than this year.
Yeah, I guess since you brought up the Redfin 2022 predictions, they're the one that came out and said home appreciation is only going to go up 3%. I know that is wicked low. That's below inflation. So I think that is I think they're wrong. I don't know if you saw that or not, but what were your thoughts on that?
Yeah, I in a talk that we've had and with other folks, I'm more of the 6 to 8% camp.
Okay.
And, there's Redfin at some at 3 and some people at 16. I'm somewhere in between.
Yeah.
I think when we last talked to, I'm a eternal optimist where
there you go.
The people that I know that are trying to buy that hope that things don't go up, maybe I can speak it into existence. Like, yeah, let's hope for only 3% appreciation.
There you go. There you go. Well, folks, if you are a part of the One Rental at a Time community, you now know that Matt the Mortgage Guy is not only California. He is all 50 states, or at least most 50, with plans to get to all 50. And if you want to talk about doing a purchase loan, getting qualified for an investment property, looking at what a rate and term or a cash out refi might want to be, go to Matt the Mortgage Guy. He's going to take care of you, let you know if what makes sense or not. And how do you want them to do that?
Go to greatmortgagebroker.com. We've set it up. It's just for, folks trying to reach out and get in touch with us and get placed with somebody who can help them out. So greatmortgagebroker.com. Doesn't take you more than 30 seconds to let us know where you're at, what you're looking to do, who you are, and we'll be in touch shortly.
And it just reminded me this morning, Fannie or the new loan limits for high dollar amounts, 977 or something, almost $1 million.
Yeah, we could do one on that. Let's do that with the new loan limits.
Very cool. Thanks, buddy.
Yep. Thank you.